Hello everyone, this is Dharmendra Rajbhar. Welcome to Quantsapp. Today we are going to talk about index contribution, and also today we are going to talk about how stock contribute to the index movement and how we can identify the opportunity by finding out the stock which has given more than like 2%, 3% or maybe 1% move, okay, and how we can capture this move, okay. And before accessing to that particular tool, we will talk about how traders often fail to find such kind of stocks, and also we will talk about the beginners, okay, the beginner traders who want to identify the stocks, okay, those who want just simple setup, okay, just simply pick up the stock and take a trade according to the strategies. All right, so we are going to talk about those traders, and also we are going to talk about some experienced traders who often try some other kind of software and setup to find the stocks, okay. So this setup is very simple, very easy to use. We will talk about how to utilize this opportunity and how to find the right stock, okay. Before, we will discuss about how index moves and how this stock make contribution in that particular moment, okay. Let's go to the board. First, we'll talk about how index contribution is all about, okay. Okay, so let's start. So you can see I am talking about Nifty, all right. So I am talking about Nifty, okay. So most of the traded indices are Nifty, then second one come Bank Nifty, okay. Then the third one is Fin Nifty, okay. So you see many times stock, I'm not talking about stock, the index, okay, whether Nifty or Bank Nifty, they just give one side move, okay, just give one side move. So there are three kind of movement, okay, in the Bank Nifty, in Nifty or Bank Nifty indices, okay. First, I'm sorry, actually it is around four kind of, but like fourth one not I'm sorry, just cut it, this one, okay. Start. We are going to talk about we are going to talk about the, just cut till here, okay. Okay, now let's start again. All right. Hello everyone, this is Dharmendra Rajbhar. Welcome to Quantsapp. Today we are going to talk about index contribution and how it works. Today also we are going to talk about new traders, how they find it very difficult to find the stock which has given a significant movement in intraday, and also we are going to talk about experienced traders who also fail to find which stocks today has given more than 2% or 3% movement. All right. So we are going to identify the loopholes where we often fail to find such kind of stocks. Also, we are going to talk about the stocks which has a greater impact in the movement of the indices also. So we can talk about like how we can rectify these particular mistakes, okay, whichever you are making while selecting the stocks, okay. Cut. All right, cut. No. Start. Hello traders, welcome to Quantsapp. This is Dharmendra Rajbhar. Today we are going to talk about index contribution, all right, and how stock contribute in a particular index about its movement, and also we are going to find about how a particular stock has gave tremendous movement in intraday and how it has contributed to the movement of index, okay. We are going to talk about new traders who often find it very difficult to find the particular stock which has given a significant movement in a day. We are also going to talk about experienced traders who find it very difficult, or maybe they fail to find a particular stock which has given the movement, all right. And we are going to talk about how we can align these stocks along with the index movement and we can find the opportunity, all right. So we are going to talk about index contributors, we are going to talk about stocks, we are going to talk about the strategies and how we can how we can attain the maximum benefit from these opportunities. Okay. So now let's go to the board and we will talk about how index contribution is made. Okay. So now you can see we often trade in three kind of index. Okay. Nifty, Bank Nifty and Fin Nifty. Alright, Fin Nifty is new, but we are majorly will talk about Nifty and Bank Nifty. Okay. So Nifty, it represent, just a minute, yeah, it represents entire stock in NSE. Entire stock in Nifty. If you talk about total Nifty, if you are going to talk about Nifty 50, then it only represents top 50 stocks which has the major contribution to the indices, which has larger market share. Okay. Bank Nifty, most of the stocks are banks, okay. In Bank Nifty, most of the stocks are bank, NBFC and other financial institutions. Okay. So these are the major stocks in the Nifty and the Bank Nifty. Okay. So we often find that whenever the Bank Nifty, it gives one-sided direction. Okay. And so stocks also give that kind of direction. But if the Bank Nifty moves downside, stocks also give same kind of direction. And if the Bank Nifty is highly volatile, stocks also move in the same direction. The Bank Nifty is sideways, then stocks are also sideways, majority of the stocks. So we will talk about how Bank Nifty and Nifty moves. Okay. So this is our indices and respective to their stocks. Okay. Now we are going to talk about how Nifty moves. You can see there are four mode. Okay. Four kind of movement in the indices. If I'm talking about, first one is one side. Okay. One side. You can see if Nifty moves like this, and it gives huge movement, or it moves like this, and it gives downside huge movement. So on that particular day, you can see Nifty has given 200, maybe 3 or 400 points. Okay. Here on the downside also 200 or 300-400 points. Okay. In case of Bank Nifty, it is much bigger. So Bank Nifty, it moved like this. It has given me 1000 points. Downside also 1000 points. Or I can say in a range 600 to 1000. Okay. So make it 600 to 1000. Okay. One side direction. Okay. So if you look at the stocks on that day, look at the stocks. Okay. Most of the stock move in that particular direction. Okay. So it is like people say that, okay, Bank Nifty is pulling all the stocks. Okay. Nifty is pulling all the stocks. And other people say, no, the SDFs in Bank Nifty is pulling the Bank Nifty, or it is pushing the Bank Nifty. Okay. So we are talking about the majority stocks. Okay. Major stocks which are contributing to the index movement. All right. So this is one side movement. Okay. So if you go with the banks, okay, if you go with the banks in the Bank Nifty, let's just say the Bank Nifty has given the movement of 2%. Okay. 2% or maybe 3%. Okay. So you see the stocks which are contributing to the Bank Nifty, okay, they have given more than 8%, 10% movement, okay, such a big movement, 10%, okay. So we are going to talk about how we can capture those, okay. Similarly, if the bank nifty is going down 1-2%, the stocks also moves down like 7, 8, 10% downside, okay. So it is very crucial to catch those stocks. It is very important to catch the stock because we are going to make bigger profit in those particular stocks, okay. So similarly, if the index, okay, yeah, if index, okay, so let me delete this, okay, then we will talk about, okay, let me write this, all right. So we are going to talk, okay, if index moves, okay, 1 to 3%, 1 to 3%, then in stock which are contributing to that particular to that particular index, stocks moves around 8%, okay, let's just say 6 to 8%, okay. And also if I'm not talking about the quantity, even with if you go with the minimum lot, you will get maximum profit in the stocks. You will get maximum profit in the stocks. Most important reason for the index and the stocks is implied volatility, okay, it differs in the stocks. Second thing is theta factor, okay. So if you comparing time decay in stock and index, then index the time in index time decay is more, okay, in stock time decay is less, because the stock will consider monthly expiry and index most of the people who trade they consider weekly expiry, okay. So you can see if index move 1 to 3%, stock will give you 6 to 8% move, okay, 6 to 8%. If it is like less than 1%, even then, if it is like, you can see even if a stock move to 1% or less than 1%, okay, even then stock will give you 3 to 4%, 3 to 4%. Even the stock will give it 3%. I will give you an example, okay. We'll go along with that. I will give you the example, okay. So even the stock will give you 3 to 4% return, okay. So in bank nifty, only the financial stock will give you that kind of return, not other stock. But in nifty, okay, nifty, all other stock, all nifty 50 stock, major stocks, it will give you that kind of return, okay. So we will see how those stock has contributed, okay. Now we have talked about only one-sided move, okay, only one-sided move. Now we'll talk about, just a minute. We'll talk about sideways, okay. Second one is, just a minute. Sideways, okay. So you can see the index, there is a range, okay. The index have gave the movement like this, like this, like this. Most of the time it has given the sideways, okay, it has given the sideways. So the option writer will get most of the benefit from this this kind of movement in the indices. But if you are going to talk about stock, you can see in stock, it is not necessary that all the all the stock will be on sideways, but most of the stock will be on sideways. You need to find the stock which has given the movement, okay. But it is very difficult to filter out those stocks, okay. But if you keep an eye on those particular stock which have higher volatility, you can find those stock easily, all right. So when the market is sideways, okay, so you can see most of the stock will be sideways, okay, most of the stock will be sideways. Most of the stocks will be sideways, okay. So if the index is sideways, stock will also be sideways. So what you will do, as an option buyer, I will not enter into the trade. Okay, the reason is time decay. Okay, the most important reason is time decay, because if I am buying the option, okay, whether I am going to buy the naked option or whether I am going to buy with the spread. Okay, so in naked option I will make most of the losses, okay, because of time decay. But if I'll go with the spread, due to time decay my risks will be less, so my loss will be minimum. Okay, but there might be a loss. All right, so if I'll go with the naked option, so I'll make most of the losses during sideways. If I'll go with the spread, I will make some losses, okay, not that greater losses, but some losses. So that is the case of sideways. So the sideways market in index, it shows you that we will not take the trade today, okay, if the market is sideways in the first half. All right, we will not initiate the trade. We will look for the opportunity, but if it is sideways, if the market enters into a zone and it is making just high and low in that particular zone, so I will not enter into that trade. Okay, so I'll just skip that day, because like protecting your capital is more important. Okay, protecting your capital is more important than making the loss. All right, so this is the conception. Okay, so during sideways I will not initiate the trade. Let's talk about another move. Okay, so if I'll now, so sideways, now we are going to talk about our favorite third one, highly volatile. Okay, so when the index is volatile or stock is highly volatile, what they do, they in the beginning they move like this, then they move like this, then again they come down, here make sideways, then again move like this, then again come down, and this is how from 9:15 to 3:30, this is how it ends. So you can see this is a highly volatile market. Okay, so let's just say if today the market has moved like this, so I can say today market there was huge volatility in the market. And if the volatility, implied volatility of the stocks, of the options, okay, in particular stock and in the indices is more, then I will make maximum benefit as a option buyer also and as a option seller also, because IV is directly proportional, okay, directly proportional to the option premium. If it increases, premium also increases. Okay, so during high volatility, if the index is highly volatile, if index moves like this, okay, so most of the stock also move like this. All right, so in this case the stocks will also be volatile. The stocks will be volatile. Okay, so when I find in the morning, this like how the stock has moved, like how the index is moving like this, so I just make a perception, okay, the stock might also move like this, majority of the stock, so it is very easy for me to take a trade in those stocks. Okay, now this is what I have explained, that how index move and how stock perform according to that. Now we will talk about new traders and experienced traders, how they find it difficult to select those stocks. Okay, first, if you are a new trader, okay, if you are a new trader, most of the trader, you know, they work on the tips. Okay, new trader, so without learning they will make huge losses. Without learning they make huge losses, because the tips they are getting, okay, the tips they are getting, it's without any data backing. Okay, so they don't have any knowledge about the tips, that how it has been generated, what kind of strategies they have used. Okay, so just simply they just blindly follow that tips and they buy those particular option or stock. Okay, so when they start learning, first mistake they make is choosing the stock. chooses the stock. I can say identifying the stocks. Identifying stocks. This is where they lack most. Okay, most of the time they find it very difficult to choose the stock or identify the stock because there are a lot of stocks. Okay, there are a lot of stocks, large cap, mid cap, small cap. Okay, and when it comes to derivatives trading, okay, so this is only about stock, this is about cash. But when it comes to derivatives trading, all right, when it comes to derivatives trading, it is very difficult for them. Why? I'll tell you the reason. First is selecting the stock on the basis of liquidity. Okay, liquidity issue, liquidity, IV selection. All right, liquidity, IV selection. Then they go about sector, which stock to choose. Okay, stock selection. See, in stock selection that most of the large caps are there. All right, so they find it very difficult. Okay, which stock to choose. Okay, some of the people what they say, okay, I trade only these 5 to 6 stocks. Those 5 to 6 stocks might not suitable for them, might not suitable for a particular trader. Okay, they find it very difficult. Okay, they find it very difficult. They find it, okay, it is very highly, it is highly volatile. Okay, I can't find any opportunity in these stocks. So they often miss those opportunity. Okay, and also liquidity. Let's just say I'm talking about Bata India. Okay, so I have less capital. Okay, as a new trader, most of the new traders, they bring less capital. So if you go for Bata India, okay, or any other illiquid stock, okay, so whenever they take a trade, they buy OTM call or they buy OTM put. Okay, so where there is a there is a lack of, you can say, there are not more buyers and sellers of that particular option on that particular strike. Okay, so they often buy the stock but they fail to sell it or they fail to book the loss. Okay, because of liquidity issue. Okay, so that is a problem new trader face. Okay, in while choosing the stock, identifying the stocks. Okay, then derivatives, derivative section, liquidity, IV, and stocks. Okay, so these are the problems they face. Okay, so I'm talking about new traders. Now I'm talking about experienced traders. Okay, now what experienced traders do? Okay, they just select few stocks and they start taking a trade. Okay, let's just say in index contribution. Okay, let's just say in index contribution I am talking about Nifty. Okay, in Nifty there are 50 stock, Nifty 50. Let's just say the 40 stock has given the one side movement, but only 10 stock they remain sideways or they have not given any movement. So as experienced trader, if I am sticking to those only 5 stocks, okay, limited stocks, so what if those 5 stocks hasn't given any movement? Then they will be in losses. So choosing stock and identifying stock, the same problem for the experienced trader also. Okay, for them it is same. Okay, same. Okay, these IV liquidity is also, but most of the like traders who are familiar with the trading system, so they know about IV and liquidity. Okay, so most important here I'm talking about is selection of the stock. Okay, so let's just say I'm sticking to only few stocks. Okay, those traders who are like, no, I trade only Adani Entertainment, I trade only Reliance, I trade only Infosys, I trade only in BEL or BSEL. Okay, so I don't trade any other stock. So if on that particular day that stock hasn't moved, okay, according to the index, or its contribution to the index is very low, okay, so you can say that they have missed the huge opportunity. They have really missed the huge opportunity. So that is what I am talking about, that today's video is about index contribution. Today's video is about new traders, how they often fail to choose the stocks, and about the experienced traders also. Today we are also going to talk about how you can capture intraday big move, okay, according to the index contribution. All right. So this is the problem as a new trader and experienced trader. I often face this kind of constraints. Okay, so we will rectify these constraints today. Okay, so these are the drawbacks. Okay, these are the drawbacks for not choosing the stock rightly. Okay, all right. Okay, so as a new trader, okay, so what I have to do, go with the trend. Okay, even experienced trader and new trader, for both it is same. Go with the trend. Okay, choose right stock. And now right stock I am talking, it is not necessary that it is 100%, it is not correct to say that it is going to work 100% of the time, but it should work most of the time. Okay, let's just say 70% of the time. Okay, so choosing the right stock is very important, which is moving along with the index. Okay, then third one, choose right strategy. All right, choose right strategy. Fourth one is risk management. Okay, it might be on the fourth, it might be on fourth on the list, but it is very important. Risk management. Okay, so these 4 points are really important for a trader, whether you are a new trader or experienced trader. Okay, now we are going to talk about index contribution. All right, so let's go to the Quantsapp application. So this is a Quantsapp application. All right, so just go to search. All right, type it over here. Okay, okay, so index contribution. Just a minute. Okay, just I'll cut this one. Just cut till here. Tools. Yeah. So now start again. So let's go to Quantsapp application. Okay, so we'll go to analyze. I'm sorry, we'll go to track. Okay, under price and volume, you can see index contribution. All right, price and volume, I'll select index contribution. Okay, so this is the interface. All right, you can see, as I have explained you, there are 3 kind of index which are heavily traded. Okay, so first one is Nifty, Bank Nifty and Fin Nifty. So whichever index you will select, it will show you the stock which have greater contribution and which have lesser contribution. Okay, so as you know, today Nifty has given the significant movement. Okay, Nifty has given the significant movement. So we will talk about which stock has more contribution. That means which stock has given more than 2 or 3% return. So here you can see these all green stocks, they were on positive sides. So I can see Reliance from the oil sector. Okay, it has moved more than 4%, that means 120 points. You can see ICICI Bank, it is 1.41. Then Bharti Airtel 3%. Okay, Axis Bank 1%. Then Ultra Cement, you can say 2%. Okay, look at the percentage change. Okay, look at the change in price. Okay, look at the change in price. Just imagine if you have chosen any of the stock today, okay, any of the stock today, how much profit you could have made, right? How much profit you could have made. First, let me explain how this interface works. Then we will go with the stock, how we could have made a profit in those particular stock. Okay. So in the green color, okay, in the green color, it is showing all the stocks which have moved along with the Nifty. Along with the Nifty. Nifty has gave tremendous movement on the upside. Okay. So these stocks has given the upside movement. Okay. Now below, if you scroll down, the stocks which are in red, they have given the losses. I am not saying losses, but they were on the downside, okay, downtrend. Now just look at the change in price and also look at the percentage change. Okay, it is very minimal. It is very minimal. Okay, you can see in Indus Bank the price is 1495, 1400 scrape. Okay, you look at the percentage change, 0.9 minus 0.02. Look at the power grid, look at the HDFC Life, okay, look at SCL Tech, okay, you can see at the Tata Consumer, you can see all of them, the change, okay, except a few of the stocks, okay, look at the change, it is like around 0.4, 0.5, okay, 0.3, this kind of downside movement they have gained, they were in red, so they close in negative, so you can see the negativity is very low. The negativity is very low. Okay, some of the stocks has given like 2% negative. Okay, you can say that 1-2%, but most of the stock you can say they are between 0 to 1%, 0 to 1% on the negative side. All right, now let's go and select positive side. Okay, you can see the Reliance 4%, ICICI Bank 1.4, Bharti Airtel 3%. Okay, you can see Sun Pharma 1.4, 1.1, 2.5, Ultra Cement. Okay, so these are the contribution. These are the on the uptrend stock. These are the uptrend stocks. Okay. Now, if you want to change from the indices, you can change it from here. And if you want to look for the previous day index contribution, you can select the date from here. Okay. Today is 26 June. If I am changing the date, okay, I can change it from here. I want to look from 25th. Okay. Just take a look. You can see below they are negative and here they are positive. So Reliance again, ICICI Bank you can see, Axis Bank 4%, Shriram Finance 4%. Okay. Major contribution you can see. All right. Why I am just pressurizing more on the percentage on the stocks, because these stocks has give the big movement. Okay, if I have chosen these stocks and I just put it into my strategy, all right, I'll go with the spread, or I'll go with the naked option if I'm a good risk taker. Okay, so I could have made a significant amount of profit. All right, so you can see these are the stocks. Okay, I can change the data from the date. Okay, I have selected 25th of June. So from 25th of June 26th, you can see I have got this kind of stocks which were in on the upside and which were in on the downside. So this is the data which I am getting. All right, you can see I have changed from 24th. Okay, so you can alter the movement of this. I am not saying alter the movement. You can change the date. Okay, and you can see the significant changes in the stock movement, okay, from the last 3 days. All right, so here you can see number of stocks, okay, how many are negative and how many are positive. All right, now let's go to the Bank Nifty. If I select Bank Nifty, all right, so as I said, majority of the stocks are banks and NBFCs. So you can see 8 stocks are in positive direction, because since 18th of June, okay, since 18th of June, Bank Nifty is positive. It has moved from 50,000 to 52,500, more than 2,500 points move. So obviously, most of the bank will be on upside. Okay, so you can see ICICI Bank, HDFC Bank, okay, and Kotak Bank. These are the major players. Okay, these are the major players because they have larger market share as compared to others. So definitely, so it is like quite obvious that this particular stock might give you return as might give you good return as compared to Bank Nifty. Okay, because Bank Nifty has moved in the particular direction, so it is very much anticipated. Okay, that these stocks also give you that kind of movement, that kind of return. All right. Now, so you can see ICICI Bank 4% return. So if I select ICICI Bank from here, okay, and it will directly take me to the chart. Okay, so let's just say I am taking 15-minute time frame or 30 minutes time frame. Okay, just take a look. Just take a look right from the 25th, how it has gave the movement like this. How it has given me movement like this. So here, what kind of strategy I will employ? Okay, it is very simple. If I am looking for the consolidation breakout, it has given me consolidation breakout. If I am looking at the resistance breakout, it has given me the resistance breakout. So what I'll do, I'll just draw a line over here. Okay, so you can see this is the level it has tested. All right, on 25th of June, you can see it has gave the momentum. Okay, so it was here. Okay, let me select. Okay, now okay, no issues. You can see at here the price is 1169.73. Right now, today the closing is 1211. Okay, 1211 means you can see almost 40 rupees. Okay, it moves from 1170 to 1210, 40 rupees difference. Okay, so if I'm going to calculate with that, then it roughly comes around 4%. 4% moves in 2 days. You can see that. Okay, if I'm going to employ a spread strategy, then it might have given me that kind of profit. So let's just employ. Okay, let's just go with the strategy. So I'll go to scan. I'll select trade recap. I'll go with the strategy. So Axis Bank on 24th. Okay, 9:15. Okay, let it come. Just a minute. Hold on. Yeah. So 11:50. What I'll do, I'll buy the ATM. Okay, ATM call option. So I'll select this one. Okay, I'll just increase the lot. All right, this one. Okay, now what I'll do, I'll buy the OTM. Okay, OTM call option. I'm sorry, I'm going to sell the OTM call option. Okay, so I'll do okay, I'm looking at the 2-3% return. So I'll select 1190. So 1190. All right. Okay. All right. Now I am going to move it according to day. Okay. You can see the profit I have made. You can see the profit I have made. Okay, 34,860. This is the current market price. Although I have made losses, the call which I have sold, okay, it was 3, current is 4.9, 14.9. But you can see this call which I have bought, it is 11.55, and the PNL in that is 51,000, and the loss in here is 16,660. So you can see I have made around 34,860 rupees profit by using the bull call spread strategy, because whenever I take a trade, okay, like just a positional trade, so I'll always go with the spread. I always go with the hedging strategy. Alright, even if I'm going to buy the future, I'll hedge it with the option, just to define my risk, just to manage the risk, because I don't want to take a naked call or naked future to maximize the return, also to maximize the loss. All right. So here what I'm trying to explain, you can see with the index contributor, where I have saw that how this stock has given the momentum from last 2 days and how it could have given me the profit like this. All right, this kind of profit I can easily achieve if I am going to follow the index contributor. All right, so what index contributor has done for me? Okay, let's talk about that. Let's talk about that. Okay, because these are the questions might arising in your stock. So it has simplified what they have simplified: identification of the stocks, also along with that choosing the stocks, and the second one is I will be staying out of those stocks which are not performing well. Okay, so not choosing non-performing stock. Not choosing the non-performing stocks. Okay. Then third one will be no rigid set of stocks. No rigid set of stocks. All right. So as a new trader, even as experienced trader, these are the problems, okay, which the index contributor has solved for you. First is it has simplified identification and choosing the stock. Okay, you don't need a software which will give you the directly the indication. Okay, there is a breakout. You can select this stock. This is the momentum. Okay, it has given the set of stocks. Okay, it is rallying along with the index, so you can choose with the stocks and you can make significant amount of profit. Now, not choosing non-performing stock. Let's just say if I have taken some stock which has given only 1% move, so I might have made very few profit. But what if I have chosen the stocks which were going down? The index is going up, but the stocks are going down, -1% or minus. What if I have chosen those stocks? I could have made losses. So it will help me to identify those stocks to which I am not going to select. So it is rectifying. Okay, it is just, you can say it is filtering. Okay, filtering non-performing stocks. Okay, you can see that. I'll just type it over here for you. Filtering non-performing stocks. Third one is no rigid set of stock. Let's just say some of the traders who have rigid set of stocks, they trade only those 5 or 6 set of stocks. Okay, so they fail to catch the big movement. Okay, sometimes. So if you are if you are getting out of the rigid mindset, you might be able to identify the stock which has moved along with the Nifty, and you could have made the significant amount of profit. Okay, so these 3 things you have learned. These three things, the index contributor will help you to identify, will help you to improve, will help you to identify the stock, which also help you to which things you should not do. Okay, which things you should not do. So these are the things which I have learned. All right. So let's go to the index contribution again. Okay. So in Nifty, you can say Reliance, Nifty, Bank Nifty and Fin Nifty. All right. Now, this is according to the index. What if I want to go according to the sectors? According to the sectors. So what I'll do, right from the script on the right hand, it is sector. Okay, I'll select the sectors. So you can see how the sectors are performing, how the sector has performed. Let's just say it will help me to filter out more in an aggressive manner. Alright, so you can see which sector has given the more momentum: telecom, oil, okay, cement. You can see the oil sector has gave the maximum movement, and here capital goods and FMCG. Okay, you can see the oil sector. So these are the oil sector. Okay, so what I'll do, I'll go with the oil sectors. Okay, so let's go to the track and select synopsis future OI. Okay, what I'll do, I'll go to oil sector. Okay, so here I'll select oil. Okay, Reliance, you can see Reliance has gave the momentum, BPCL, GAIL, MGL, IGL, ONGC. Just look at the figure, look at the OI changes. Okay, look at the OI changes and look at the price changes over here. So if I am going to select the Reliance, okay, just wait a minute. It's coming. Just look at the Reliance. Okay, so as I've shown you, if you are going to select the sectors and if you are going to select the stocks, just go to the track and select synopsis future OI. Okay, so it is not showing up over here. Just a minute. Okay, now it has came. Now you can see, okay, right from today, all right, you can see from 2920 to 3000, 3025, 100 points move, 100 points move right from the beginning. Okay, if I'll select, if I'll change the time frame over here, let's just say I'm going to select the 30 minutes. Okay, you can see from the 24th, you can see this is the support. All right, so let me draw it for you. Okay, let me draw it for you. This is a, you can see this is a support which they have made. Okay, and you can see the resistance over here. You can see it over here, the consolidation zone over here. Okay, you can see the consolidation over here because the price is respected over here, here also, and here. You can see there is a breakout. All right, you can see how much profit they have made in a single day. So this is the contribution. Okay, you can see the OI built up was very high. Okay, obviously OI built up means there is a backing from the buyer also. With the data backing, the breakout was sustainable, and you can see the big move it has captured. All right, so if I am going to check with the trade recap, you could see that how much profit I could have made. All right, so this is the index contribution. So let me go to again on the index contribution. All right, so I have checked the oil on the Reliance side. Okay, now let me check the telecom. All right, because in telecom also it has given me the significant amount of profit, and in the cement sector. All right, so cement is here. You can see 1.44, and Bharti Airtel, you can see it has given me 3% return. Okay, so if I am going to check the Bharti Airtel, you can see. All right, so you can see the resistance over here, very easy to identify. Okay, you can see over here, and there is a breakout. Okay, at 11 AM, and you can see the movement of the price. All right, just look at the price, 48.86. Okay, right from the 1427 to 1476, almost 50 points move, such a big move. Okay, why I'm showing you this? Because it has made you a very simple setup. Okay, go to the index contribution, check the stocks which are going along with the index, check those stocks on the chart according to your setup. If it comes on the bullish side, you can take the bullish side trade. If the index is going down, it also showing the downtrend. Okay, according to your setup or according to any other setup which we have explained on Quantsapp. If it comes under that scanner, you can take the trade according to that. All right, always check the liquidity, always check the implied volatility, and always go with the spread, okay, while taking a position trade. Intraday trade, you can go with the naked call, but it is very risky. So as a beginner, you should not go with the naked call or naked put option. All right, so this is all from my side for the index contribution. All right, so if you like this video, okay, if you like this video, please like and share, and please stay tuned to Quantsapp for more knowledgeable video like this. This is Dharmendra Rajbhar. Thank you very much.